Well, good evening, everybody, and welcome to this webinar. We are back. BMR is back with you once again with Industry Connect, your favorite knowledge sharing platform. We started one webinar last time, and now we have come with the second edition of it. And this time, we are talking about navigating the UAE electronic invoicing mandate. Now, as the United Arab Emirates progresses towards the implementation of mandatory electronic invoicing, that is e-invoicing, businesses across all the sectors must prepare for transformatory, regulatory, tax, and technology changes. This webinar, which is being delivered by the PwC e-invoicing and tax technology specialists, will provide a comprehensive overview of the upcoming UAE e-invoicing mandate, equipping you all with the knowledge and strategic insights necessary to navigate this transition effectively. Well, to begin the session, I would like to welcome our president, Mr. Mir Mushtaba, and I would like him to address everybody before we begin the session. Thank you so much, sir.
And welcome to each and every guest. Before we really start this, I would like to mention very clearly, let us all pray for the well-being of United Arab Emirates and our honorable and respected leaders of this country who has been really taking care to protect us in the best, safest, and the most comfortable way to stay in this country even during this uncertain time. And we are thankful for our leaders for protecting us. In the meantime, dear delegates, welcome to the most important chapter which we are going to enter, which is e-invoicing. And even before we start, I would like to highly appreciate PwC for always standing with us whenever we want to share some knowledge and gain some knowledge. PwC stands with us. Meher and the team, thank you very much for being with us. And before I really go into a long lecture, I would like to just say that I welcome everybody, and we hope that we are going to gain good knowledge with this session, and we are going to really practice what e-invoicing is in our coming days. Even though UAE has extended the time to start the e-invoicing a little bit later, but we appreciate BMR's call that we have been really advanced in giving the knowledge of e-invoicing to all our fellow members in the recycling and fraternity. Welcome, and yes, let's pass on the mic to others to start the session immediately. Thank you.
Thank you so much, sir. Address.
We now have the Vice President of BMR, Mr. Anshul Gupta, and he's going to talk about the objective of this webinar. Anshul, sir, welcome to this webinar.
Welcome, friends. Hi to everyone. So welcome to one more webinar organized by BMR for empowering our recycling industry. BMR believes in knowledge sharing and continuous knowledge sharing, making sure that our industry is ready for new challenges, new issues. So we have earlier organized a webinar on multiple webinars actually on corporate tax. Then we had webinars on VAT. We had several in-person workshops for VAT. We also had several workshops and in-person conferences to address VAT refund challenges, seeking the expert advice, how to address them. And we also have engaged PwC to assist us to take our VAT refund issues with relevant authorities. And it's going on in the right direction. So BMR is working on it, towards it. Now in 2026, we have to implement e-invoicing, we all know. And it is a very positive, long-term solution for the whole industry, for the whole nation. So again, it's a great opportunity for the BMR to share the knowledge and keep our recyclers ready before this e-invoicing work starts. Though it has been delayed this time also by a few months, but it's better we get ready. We update our system, we update our human resource. So this can really help us. We have a PwC tax team to guide us. And we have been hearing about e-invoicing in UAE since almost 2 years. What objective we are trying to achieve today with our workshop is, what is e-invoicing with context to other countries in Middle East, which they already have e-invoicing and which are going to have e-invoicing very soon. How e-invoicing is going to work in UAE and how it will impact our business. The intricacies of the law has to be observed very well. That's why this workshop will really help you. How UAE-based recycling companies can be prepared for it. what is this five-corner model? I'm sure many of you have done some research and already started working on it. So what is this five-corner model? How do you do invoicing when the supplier or a customer is below 50 million? So we all have all these questions in our mind with invoicing coming up. So our objective is to answer all these questions which you have in mind. So we'll have the session divided into two parts. One is presentation, and then after the presentation, we'll have Q&A. Wasim has already is moderating for all this. So also, I think some of us have questions which they've posted, that tax credit and debit note, how the invoicing will be managing that particular thing. So let's address all these questions, hear from the experts, the team of experts, PwC team. Sanjeev ji, can you please introduce our expert team to our members?
Good afternoon, attendees. A very, very warm welcome to this very, very important session. Let me introduce the elite panelists from PwC. To begin with, Mr. Maher Al-Awar. He is not someone whom we are seeing for the first time. He has always been a big supporter to every initiative taken by BMR. So let me quickly introduce Mr. Maher. He is a partner in indirect tax at PwC Middle East, based in Dubai. He has over 18 years of tax advisory experience in the Middle East and leads specialized teams focused on VAT and e-invoicing implementation and advisory across the GCC. His experience includes advising clients on complex indirect tax matters, regulatory compliance, and strategic tax planning, as well as supporting high-impact engagements linked to VAT legislation, policy development, and government authority engagement across the region. Our second panelist is Mr. Ishan Kathuria, who is a tax partner at PwC Middle East, based in Dubai. And he leads PwC Middle East UAE e-invoicing practice. He has over 16 years of experience advising clients on indirect tax matters across the Middle East and India, with a focus on e-commerce, real estate, and consumer markets. His experience includes large-scale VAT and e-invoicing implementation projects, tax compliance and structuring, and collaboration with government authorities on VAT policies and e-invoicing across the GCC. Our third panelist is going to be Mr. Mark Al-Hakim, who is a manager in indirect tax at PwC in Dubai and previously part of PwC France. He specializes in e-invoicing and digital tax transformation with over 9 years of experience advising organizations across Europe and the UAE on regulatory compliance, system readiness, digital transformation, and implementation of e-invoicing frameworks. Let us begin the session. I invite PwC team to take up from here.
Hello, everyone. Thank you for joining us. And before I start, I want to mention a thank you note to BMR leadership, BMR team, for always inviting us to share knowledge and be part of that circle. We do appreciate this involvement, and we hope that this session will bring an informative details about the invoicing implementation. As a quick note, today we will go through various elements of e-invoicing, starting from global trends and what is e-invoicing. We will then move into the Middle East, and we give you more regional focus on how Middle East is being impacted by e-invoicing. when the focus would be more on the UE invoicing model, which actually going live and going into more focused approach now. What would be the impact on your business, and what would be a roadmap to actually implement a successful journey for e-invoicing process. Thank you for introducing us. We will go into details with this session. As you may know, this session is recorded and we will be sharing this recording later on. Use the chat function to add your questions, so we will be addressing those questions at the end. But just as also a note for the attendees on this session, we will give you details and information about the invoicing, but don't include or don't consider that this is a guidance or an advice on invoicing, because every and each business has specific consideration. So you would need to still seek a formal e-invoicing advice to be able to understand how this will be affecting your business and how you need to navigate that implementation accordingly. Maybe let me start with the global trends and what is e-invoicing, and we'll move later on to Ishan and Mark to give you more details about the Middle East and the UAE. But before going into what is e-invoicing, I want just to highlight that globally and worldwide, tax administrations are redesigning how they collect, validate, and use of data and transactions. So e-invoicing, it's a much broader global shift in the tax administration and business process. The important point to take away at the outset is that e-invoicing is not simply a technology change or a change in the invoice format. It represents a move toward more standardized, automated, and potentially real-time exchange of transactional data between businesses, governments, and the tax authority. What is e-invoicing? It is useful, I think, to define what we mean by e-invoicing. So at its simplest, e-invoicing is the digital exchange of invoices between a supplier and a buyer. But it is also important to distinguish a true e-invoice from a PDF invoice sent by email. A PDF may be electronic in the ordinary sense, but it is typically an unstructured document. However, an e-invoice is created and transmitted in a standardized machine-readable format, such XML. And Mark will give us more details about what an XML will include. The distinction between an e-invoice comes from the structure of the data. When an invoice data is created in a format that system can read automatically, it can be exchanged through specialized systems or networks and then processed by the accounting team, by tax, or by the ERP system. In the UAE, for example, you have a specific role for an accredited service provider who will be an intermediary between you as a buyer or you as a recipient and the tax authority. We'll get into more details as we go. Moving to the next slide. What is the e-invoicing strategic benefits for both government, businesses, and the tax administration? So as I mentioned, governments and businesses both are investing heavily in digitalization. From a government perspective, the benefits are clear, right? E-invoicing can provide better data for policy making, improve budget expense control, reduce VAT leakage, and this is a very important point, strengthen the audit trail, and enhance security and support the broader digitalization agenda of a tax administration. From a business perspective, the benefits are also significant. Businesses can reduce the cost and inefficiency of paper-based or email-based invoicing, improve automation and system integration, accelerate the e-invoicing delivery, reduce human error, and this is also very important, strengthen security, and support a quicker and more secure legal archiving. So in other words, for businesses, the same structured data that gives tax authority better visibility can also help businesses improve their own processes. A simple example is accounts payable. In a traditional process, for example, business may receive invoices by email, extract invoices detail manually, enter those details into their ERP, then reconcile the invoice against a purchase order, and then archive the document separately. In an e-invoicing model, structured data can flow directly into the relevant system, which supports automation, reconciliation, reporting, archiving, and also it will support more cash management. Because in any way, if you have automated all that process, you will receive the invoice in a electronic way. You will be able to approve that in an electronic way, and potentially the payment of that invoice will be happening in a faster way. I mentioned that VAT gap is a main consideration for government to look into e-invoicing and automation. So what we can also here look into is that tax authorities are placing so much emphasis on e-invoicing and related digital reporting measures. So governments are facing a combination of pressures, including revenue needs, VAT gap concerns, increasing healthcare and aging population cost, plus the COVID-19 expenditure recovery that government are still looking at to close. In putting additional elements like inflation, energy cost at the moment with the conflict that is happening, and environmental pressure. At the same time, tax authorities are looking into modernizing how they administer tax. This includes the direction of travel reflected in OECD Tax Administration 3.0, the use of advanced technology such as AI to detect fraud, and the broader objective of creating a more efficient environment for both the tax authorities and businesses. With some evidence here, like country examples on this slide are useful because they show the scale of what governments are trying to achieve. Like Mexico, for example, has reported reduced its VAT gap by 50%, while Italy achieved an estimated VAT gap reduction of approximately 3.1 billion euros, representing a 10 to 11% of the VAT gap. These examples show why e-invoicing is not viewed by government as a mere change, but also a concept to increase revenue and manage the VAT gap. Moving forward, if this is a very packed slide, but it also shows the movement of e-invoicing as of 2025 onward. Sorry, I can hear myself. I'm not sure if there is a gap in my voice, but can you hear me clearly?
We can hear you, Anil.
Okay, sorry. So this slide shows that if we look at 2025, we can see a wide range of measures, including, for example, Malaysia B2B and B2G invoicing obligations, Germany phased B2B invoicing rollout, Jordan, which is a country in the Middle East, which has also implemented B2B invoicing phase 2, and other countries as well. The momentum continues in 2026. Belgium B2B invoicing mandate, Croatia B2B invoicing mandate, Poland, and so on. France is also looking into that, and the UAE as well, and we go more into details on the UAE. For UAE, for example, they published that they will go live as of 1 July 2026 for e-invoicing. There is a wave happening, so we will go into details. But 2026 is UAE e-invoicing year. Looking forward ahead, lots of countries, they have confirmed their obligation to go through that e-invoicing process. I think between 2025 and 2030, this is where most of the countries will go live. Most of the European countries are looking into this, and most probably the norm will be all business to business and business to government transaction will be governed through e-invoicing process. So this is a practical message that multinational businesses should not treat or consider invoicing as a series of isolated country by country last minute compliance project. Its number of obligation, the phased implementation date, and the range of transaction type between B2B, B2G, B2C, all will be going through real-time reporting, with e-invoicing will be the main header or main title for the coming years from data and tax administration, automation, digitalization agenda. Moving forward, um, this is more the change by itself. The broader point is that businesses are moving from traditional compliance environment to a more real-time analytical environment. The aim at the end is that potentially your VAT return will be auto-populated. The same way now, for example, if you import goods at customs and you use your customs number and TRN, that value of customs will be reported in your VAT return automatically. So potentially other transactions as well will be automated and coming into your VAT return on a real-time basis. So with that model, we expect that more practical way of things about how to use data and data readiness is really key. One relevant example as well is VAT refunds. Going forward, we anticipate that if you issue an invoice to your customer, your customer will be receiving this invoice through e-invoicing and validating that this is a valid e-invoice transaction. Then if any change to that transaction itself need to monitor through e-invoicing process by either issuing a credit note or in issuing another e-invoice, but also payment will be coordinated through that platform at a certain stage. So the validity or the check of the documentation related to VAT refund will happen in a more real-time basis, which will help as well expediting the process of the VAT refund and minimizing the interaction between the taxpayer and the tax authority for that refund approach as we go. So this is in a nutshell the global aspect of e-invoicing and how this journey will shape the Middle East and the UAE specifically. And we'll hand it over to my colleague Ishan to give you more aspects about the Middle East e-invoicing focus.
Great.
Thank you.
Thank you, Maher. And I think, first of all, again, thank you to the BMR team for giving us this opportunity. I hope I'm audible, right?
Yes, Ishan.
Great. Okay, so I think my main agenda for this now, like since Maher has given you a global perspective, I would like to give you more of a regional perspective as well. What's happening when it comes to Middle East with respect to invoicing, right? But before I start that, I wanted to highlight something very important because when we started the session, we heard multiple times, and I think Anshul ji and Sanji, I think Naseem ji also mentioned that now e-invoicing has been delayed. I would like to clarify that e-invoicing implementation has not been delayed. The implementation timelines still stand at 1 January 2027 because, and that is very critical to note because that's a misconception that's happening that the implementation timelines have been delayed, which is not the case. If you're, and Mark will cover in more detail regarding the timelines and all, but e-invoicing implementation needs to happen from 1st January 2027 as was planned before. What they have delayed is the mandatory appointment of the ASP, which is the accredited service provider, which you will need to appoint. So earlier you were required to appoint an ASP by 31st July 26. Now that has been, you've been given 3 more months to appoint the ASP. But then the issue would be the later you appoint an ASP, the less time you will have for implementation. So it's something that would also need to be taken into consideration, and we'll discuss that in detail when we get to that section itself. Now, on this slide, you would see multiple models, and I think the previous slide Maher showed you from a global perspective across the globe, countries implementing, right? So, and I think that's why we say it's a question of when any country would be implementing in invoicing rather than if. And also, if we look at from a country perspective, every country is planning implementing e-invoicing model relevant to what suits their infrastructure, their regional complications and complexities, right? So I'll not go into detail of each and every model over here, but just to give you a difference between different types of model, I would want to discuss a centralized model vis-a-vis a decentralized model. So if I take example of Saudi, Egypt, Jordan, which has already implemented e-invoicing, they have gone for a centralized model. What do you mean by centralized model? A centralized model where all the tax invoices issued by the taxpayers in that country will go to a central platform, which will be tax authorities in most of these countries, which is say ZATCA in Saudi, ETA in Egypt, JTA in Jordan. And then these tax authorities validate the invoices on a real-time basis, and then these invoices are either shared back with the taxpayer to be shared with customers or are directly shared with the customers. So this is a centralized model which Saudi, Egypt, Jordan has adopted. Now, what UAE is implementing is different to all these countries. It's adopting of more of a global approach. What's happening in Europe, if you talk about VIDA and other aspects as well. So it's more in line with the international framework where it's adopting a decentralized model where tax authorities themselves do not validate any invoices. They have outsourced these responsibility or decentralized it to multiple ASPs who are private players. And then these private players will be validating e-invoicing and contracting with you and then sharing the invoices directly with the customers. Now, there are pros and cons of both the models, right? If I talk about centralized model, you can directly integrate your systems with the tax authority system and get the validation done and then share with the customer. Plus, under centralized model, you only have to worry about your AR processes, which is your outbound processes. What I mean by AR is when you're issuing the invoices, that is your AR transaction, which is your accounts receivable, which is your outbound transactions. Your procurements, all the invoices that you are getting from your vendors are responsible to validate it with the tax authorities and then share a validated copy with you. However, under decentralized model, you have to worry about both AR and AP processes, and hence it becomes more complicated when we talk about the UAE model that's getting implemented. More efficient, but a little bit more complicated because you don't need to only focus on your outbound transactions when you are issuing invoices, but also on your inbound transactions. So all the procurements that you would be doing from your vendors, that also needs to go through this ASP. So your ASP that you will appoint will have to validate those as well again when you receive these invoices. Now, even though that brings efficiencies to your processes, that means more cost of running business operations as well, right? And why? Because whatever these ASPs will charge you will be on a per invoice validation basis. So the more transformations, the more validations you will ask them to do over and above the basic validations, you will be charged extra for that. Hence, it becomes very important that we look at our systems, we look at what the gaps are in systems, and then identify those equally, because then it's important, then you will be doing those validations with the ASPs. So that is the key difference between centralized model and decentralized model, right? If we talk about other models as well, right, then you will be seeing here clearance model, real-time reporting model. These are just different models being adopted by different countries, even for different types of transactions. So if I take example of France, which is the closest country which is implementing the same model as UAE, they have said for B2B and B2G transactions, you have to adopt this decentralized model. Whereas for B2C transaction, which is business to end customer transactions, it needs to be more of a reporting model where you don't need to issue any invoice every time you do a B2C transaction, but on every month basis, every 10 days, you need to issue like report it to the tax authorities. So but what's happening in UAE as of now, only B2B and B2G transactions are in scope. B2C transactions, which are out of scope at the moment, but they will also be covered in the future. But it will need to be seen whether that would be more on the reporting model or e-invoicing model, like what Saudi and other countries are doing. If we move to the next slide, now, this slide gives you a snapshot of what's happening in different countries in the region. Right? And again, just to reiterate, it's a question of when any country would be implementing rather than if. So if we talk about Egypt, Saudi, Jordan, they have already implemented e-invoicing and have been doing that for a couple of years now. Oman and UAE has announced that they are also going with e-invoicing live charting this year, and they are going on a decentralized model vis-a-vis the centralized model being adopted by Saudi, Egypt, and Jordan. Qatar, if we see now, Qatar has announced very recently this month itself that they are also implementing e-invoicing. And it is interesting to see because this would be the first country in the region which will be implementing e-invoicing even before VAT being implemented. Because if you guys are aware, Qatar and Kuwait have not yet implemented VAT. But Qatar is again now proceeding with the e-invoicing implementation despite the fact that VAT has not been implemented, which clearly shows that e-invoicing is way bigger and way broader than what VAT is, right? So it's not only linked to VAT, but it's linked to the broader aspect of taxes and other aspects to get more visibility and all the benefits that and efficiencies that Mahir was explaining when he talked about what e-invoicing is. Again, Kuwait, Bahrain also have not made any official announcement as such, but we know that they are also working to actively towards implementation of e-invoicing. So very soon you will see news of e-invoicing coming live in Kuwait and Bahrain as well. So again, it's a very good opportunity for every one of you here in this to bring in efficiencies as soon as possible and be proactive rather than being reactive to when a regulatory change happens, but ensuring that you're proactively working and thinking long term from a long term perspective to ensure that you are compliant when it comes to the e-invoicing implementation in these countries. Um, if we move forward, Mark, so I think now we'll dive deep into the UAE invoicing model, right, which you guys are mainly here for. As I highlighted, it's a decentralized PEPAL 5-based corner model, which Mark will allude to and give you more details on the nitty-gritties on how this model will work. Over to you, Mark.
Thank you, Ishan. So as we mentioned, it's a decentralized model. Why it is a decentralized model? Because everything that is being done at the tax authority level in other countries like in KSA or in Egypt implementing e-invoicing in the region where tax authorities will clear the invoice before issuing it to the final customer. Here in UAE, all this process is being outsourced to private players. Those private players will sit on the intermediary level between taxpayers themselves and between taxpayers and the tax authority. So as you can see here, we have a 5-corner decentralized model, decentralized because it's being outsourced, 5-corner because we have 5 different parties interacting between each others. Who are these 5 parties? So first we start with corner 1. Corner 1 will be the supplier. So any company, any taxpayer issuing an invoice. So this company will be issuing the invoice data and sharing it with the accredited service provider, the ASP. This intermediary platform will validate the information, will validate the data, and create an XML electronic invoice and share it with the accredited service provider operating on behalf of the customer. So it will not share it directly with the customer, but will also share it with an ASP operating on behalf of the customer, sitting on C3 level, corner 3 level. So corner 3 will receive this XML, will validate it on the basis of some requirements in the data dictionary. Once the XML is validated, then this XML will be shared with corner 4. Corner 4 will be the final receiver or the buyer receiving the invoice. The interaction between corner 2 and corner 3 will be based on the PEPAL network. So PEPAL stands for Pan-European Public Procurement Online. So it's a European standard being used since 2008 in Europe for public procurement. And now PEPAL is being extended to be used for e-invoicing purposes between private taxpayers. So corner 2 and corner 3, all these service providers will be connected between each others through this network, through the PEPAL network. So imagine it as the internet connection. Now all of us are connected to the internet connection, each one of us through his own or her own IP address. This PEPAL will work in the same way. It's a network where each of these service providers will connect and share documents and e-invoices between each others. This is regarding the communication between C2 and C3. C5 is also part of this process. So C5 will sit on the right of this slide under the Ministry of Finance and FTA management. So C5 will be connected through the PEPAL network as well to the different service providers on the market and will be gathering all the tax data and invoice data on a real-time basis from these service providers. So instead of sharing the data directly from the taxpayer to the tax authority, this data will be shared through the accredited service providers who will play the role of an intermediary. Now, communication between corner 1 and corner 2 and corner 3 and corner 4 will depend on the arrangement that you might have with these service providers. Some of them will cover an API connection. Some of them will cover like a sort of a manual upload of an Excel file or any manual file that you can create through based on a certain template, and that you can submit to the service provider so they can extract the data that they need to create the e-invoice, the electronic XML invoice. So this will depend on the arrangement, technical and commercial arrangement that you might have with these service providers. But basically, this is a real-time or near real-time process through which service providers and taxpayers will be able to communicate all the data between each others on this real-time basis approach. This is concerning basically those service providers. So today we have 33 pre-accredited service providers on the market, already listed in on the Ministry of Finance portal. Those are pre-accredited because to become an accredited service provider, those service providers will need to respond to different requirements or cover these different requirements from a technical and legal perspective. So pre-accredited service providers have already responded to many or to the most of the requirements that we have, and they are still conducting some testing process with the tax authorities. I mean, the connection between these service providers and Corner 5. But all these pre-accredited service providers already listed have already started communicating on the market and conducting their implementation with different service providers or with different taxpayers, sorry. If we go further and we like just we cover the different operations that are in scope of this five corner model. So we should look at it from two different perspectives. First of all, from an outbound perspective, you as a supplier issuing an invoice. So whenever you have a business to business or business to government operation within the UAE, then this will so for this you will have to issue an electronic invoice through this model. If you have an overseas B2B operation, like for example for customers based in an overseas country, in this case you will still have to share the data of these operations with your accredited service provider. So the accredited service provider can share it on a real-time basis with the tax authority, but in parallel you will still have to share this data or this standard invoice with your customer, who will not be able to receive it from this PayPal network. In case your customer is based in a country implementing PayPal as well, as we said with Ishan and Maher, different countries are implementing the same model: France, Belgium, Singapore, Australia, New Zealand, Oman in the Middle East, and many other countries. If your client is based in these countries, then you will also be able to share an electronic invoice through your service provider to this customer. But in case not, then you will have to share a separate invoice or a standard invoice on the basis of the same like type of communication that you have today. We should keep in mind that B2C operations are out of scope for now. No B2C operations are concerned by this process. This is from an outbound perspective. We have some exclusions and we will go through it in the next slide of the presentation. Then from an inbound perspective, whenever you fall or you are on the customer side, then you will also receive invoices from UAE suppliers. Then all these invoices which will be received from a UAE supplier will go through or will be received through the electronic invoice channel as well. Whenever you have an overseas supplier based in another country other than UAE, then in this case, no e-invoicing will be mandatory or will be applicable for these operations. This can still be done in the same way as of today. So basically, we have some like a timeline that we need to stick to. First of all, appointing an ASP. So mainly we have four different waves. First wave regarding the early adopters, starting 1st of July 2026. So this will be for a selected taxpayer group or working group, which will be selected by the Ministry of Finance to start the invoicing. And on a voluntary adoption basis as well. So if you want to start, you can starting 1st of July if you have already appointed your ASP. Then this is first wave. Second wave, which is one of the main waves that we need to focus on, for all companies having a revenue above 50 million AED as a threshold, those companies will have to appoint an ASP by end of October 2026 with a go live date expected on the 1st of January 2027. So the main postponement discussed in the beginning of the presentation was regarding the postponement of the appointment date of the ASP for large taxpayers from first end of July 2026 to end of October 2026. So you should keep in mind that even if this has been, or this date has been postponed, then the same go live date is still maintained on 1st of January. So waiting until the end, or the end of this timeline, or the end of October to select the right ASP will make also potentially the implementation challenging a bit for you, because you will not have a lot of time to implement. So that's why keeping in mind that end of July 2026 is the right timeline to stick to will be better than considering that end of October is the deadline that you want to consider. This is second wave. Third wave for all companies having a threshold below 50 million, or a revenue below the threshold of 50 million. So those companies will have to appoint an ASP by end of March 2027, with the go live date expected on 1st of July 2027. And fourth wave for government entities with a go live date on 1st of October 2027. I saw one of the questions being asked by the attendees regarding the hybrid approach that you might conduct, or you might implement from your side. So imagine you fall, for example, in the first wave or the second wave with the large taxpayers, go live on 1st of January 2027, but your customer will fall in the second wave starting July 2027. So what do you do in this transitional period? In this case, you will have a hybrid approach. Data that you are generating for electronic invoicing will also concern those operations. So you should still share this data with your ASP, but at the same time, you can share a standard invoice with your customer. So a standard PDF, if you have this PDF format today sent via email, can still be used in the future during this transitional period. And once your customer is enrolled on eInvoicing, then you can start issue electronic invoices for this customer. This is a main question here from an AR perspective when you are issuing invoices, but also when you are receiving invoices. So when you are receiving invoices from so if you fall in the second wave and receiving invoices from large taxpayers, then in this case, those large taxpayers will have also to implement this hybrid approach, and they should have the possibility to share with you standard invoices until you go live on 1st of July 2027 if you fall within this category. Some amendments, so just to make sure that we are covering this part here, that since early 2023, like more than 3 years ago, tax authorities and Ministry of Finance started amending some requirements in the federal decree, or the VAT law, depending on or based on different requirements that are mentioned in these laws. So different amendments for different articles regarding the tax invoices, the tax credit notes, how to issue a tax invoice or a tax credit note, what are the data that should be considered, what do we do in case of a failure of issuing a tax invoice or a tax credit note. So different amendments of different clause in the VAT law has been conducted in the past 3 years, which led us to the implementation or the go live expected on 1st of January 2027. So it's not something that has been like prepared within a year. So it's been like more than 3 years that tax authorities and Ministry of Finance are working on this new reform. And one milestone that we should keep in mind was in February 2025, when tax authorities and MOF published the data dictionary for public consultation, like a sort of a consultation paper, including different requirements for e-invoicing. They took the feedback of the taxpayers and different advisors on the market as well, and are since 2025 providing different updates regarding the use cases and the different data and information that should be considered in the e-invoices or credit notes that you are issuing. So basically, within this framework, we have 16 use cases which will need to be considered. For each use case, you will have so basically for like the basic standard use case here, the issuance of a standard tax invoice. For this use case, you have 52 mandatory fields that should be covered. And for any other use case that you have, you you will have to add on these 52 mandatory fields some additional data or additional information related to each of the use cases. Let's say you are issuing a tax credit note. So tax credit note will include the same set of data as a tax invoice with additional information, like for example, a reference of an initial invoice, or for example, the reason why you are issuing a credit note or a tax credit note. So those are conditional fields which will become mandatory in case of applying any of the use cases that you have here. Each use case will have a set of additional data to be considered. What is very important briefly to keep in mind here is that before selecting any ASP, before starting discussing with any ASP, you should at least from your side start looking to your operations, looking to your transactions, and identify among all these 16 use cases which of the use case will concern your operations in the UAE. And that's how you can start discussing with the ASPs to see how the ASPs can provide you or can help you in managing all these use cases. Some of the data required will not be available within your systems. Then what do you do? Do you rely on the ASP to fulfill this gap? Do you do internal developments to identify the gap and fill it internally? There are different options, but you cannot start discussing with the ASPs. You can, but it will be very difficult for you to compare the offers provided by the ASPs on the market if you at least don't know what are the gaps that you have within your systems on the basis of these 16 use cases. Also, other milestone in September 2025, there were some.
Sorry,
Yes.
if we can go to the previous slide also, just one point to add from my side. So again, as Mark is highlighting, right, these mandatory fields, but these are mandatory fields as of now. So the government has also shown intention that they would want to make some further fields as well mandatory, right? So we'll need to make sure that the changes that we are making, we are agile enough to make any updates or enhancements as and when it comes. Like I'll give you an example, which is of HSN classification. So you in recycling industry obviously would have a lot of products that you would be dealing in, and every product would have a different HSN classification also, right? So as of now, that is not a mandatory information that would need to be there on the e-invoice. But going forward, it appears that tax authorities would want to make it mandatory also at some point in time in 2027 or 2028. So, and similar to that, there might be other fields also that might become mandatory with time, with when government feels they get feedback, or they see that it's important for them to track from an economy perspective what all information they need. And if you see from within the last 2 to 3 months itself, 3 versions have been updated already. So the PEPAL data dictionary also needs to be continuously monitored because they are making enhancements and updations as and when they are getting feedback from the industry players as well. So this again is an ever evolving process which needs to be ensured that it's continuously monitored and changes are made as and when required. Yep, Mark, over back to you.
Thanks, Ishan. Thank you for these clarifications. So another milestone, September 2025, some updates also published by the tax authorities and Ministry of Finance, as Ishan said. So it's an evolving regulation. You will never have, like before the go live, a final scope or a final, structure that you can follow. There will be some updates that will come with time, even after go live. What we are seeing in other countries, other jurisdictions as well, there are a lot like different updates that will come also along the way, even after the go live. So September 2025 was months during which we received some updates also from the authorities regarding from a pure tax perspective. We had the elimination of the simplified tax invoices, some clarifications regarding the zero rated supplies, which are included within the e-invoicing scope and will require a full tax invoice, even if the operation or the transaction is zero rated. We have also an update regarding the credit note or some changes within the credit note issuance, which will require the credit note to show the amount and the applicable VAT instead of showing the original invoice value or the corrected value of and the difference individually on the credit note. So now you can like show the credit note amount and the applicable VAT, which will be mandatory on this credit note as well. Another update regarding the administrative waivers or the exceptions. Some exceptions were approved or like which were already approved before, or exemptions or waivers for tax invoices and credit notes, which will no longer be available in the future with the implementation of e-invoicing. This is from a pure tax perspective, and from an e-invoicing scope perspective, we have some, as I said before, some exemptions from issuing an e-invoice for financial services which are already exempted from VAT or zero rated under Article 42. Those will be exempted from e-invoicing, so no impact on these. Some airlines operations, for example, for like miscellaneous documents which are excluded, and some airlines international transport operations of goods which will be excluded for 24 months from the go live date. So until 1st of January 2029, those will be excluded from e-invoicing. Business transactions that are conducted by the government entities in a sovereign capacity, those are also out of scope of e-invoicing. And as I said before, B2C is still out of scope of e-invoicing in UAE. Some other updates in September as well regarding the violation and administrative penalties that can be applicable upon the violation of the e-invoicing regulation or requirements. There are, like, we will give you access also to this presentation, and you can see here the main point to keep in mind is that yes, violations and administrative penalties are very important to consider, but e-invoicing has not only an impact from this perspective. It's also a business continuity project which can ensure the business continuity of your operations. And if you are not compliant with e-invoicing, this might impact your business continuity. You are not able to issue an electronic invoice, then in this case, you will not be able to receive the money, to receive the payment from your customers. And this is the main impact. Definitely penalties are to be considered, but this is not the only impact that will be that you should take into consideration on your business. There are some penalties applicable if you fail to issue an invoice, if you fail to receive any invoice, if you fail to appoint an accredited service provider by the date mentioned before, the dates mentioned before in the timeline. So different penalties that should be applicable and that you can consider. Then starting 2026, tax authorities also provided some clarifications and updates. First of all, regarding the intravat group operations. So intravat group operations will be like exempted from e-invoicing for 24 months, grace period that should be considered, only for 2 years. Those intravat group transactions will be out of scope of e-invoicing, but will still require a commercial invoice to be shared. And once e-invoicing is live for VAT group transactions as well, and an electronic commercial invoice will be then issued for these operations. Second one is regarding the e-invoicing implementation for a non-resident VAT registrant. So a non-UAE registered for UAE VAT shall implement e-invoicing as well. Self-billed documents, so a specific update here on the self-billing documents, that self-billing applies only to self-billed electronic tax invoices and electronic tax credit notes, and not for commercial invoices. So only for tax invoices or tax documents. And one important point as well regarding the provisional or pro forma invoices. So a provisional invoice is considered, or sorry, a pro forma invoice should remain a purely informational document and should not be used to request a payment, trigger collection, or record a taxable commercial supply. So in this case, where a pro forma invoice is issued for advance collection interim billing or record of an estimated supply value. In this case, this will not be considered as a pro forma invoice, but a provisional invoice. And a provisional invoice will have to be issued as a tax invoice or a tax or a commercial invoice. So it's a tax electronic invoice that should be issued, or a tax or an electronic commercial invoice that should be issued for provisional invoices. So whenever the pro forma is used for like to record a taxable supply or ask for an amount of money, like an advance payment, then in this case, this pro forma will not be considered as only for informational purposes. It will require the issuance of an electronic invoice or an electronic document as well. Basically, some information that need to be considered as well. If you have any VAT group within your operations or within your structure in UAE, then you need to consider those operations to be excluded for the first 24 months. You can still, like, considering it from a pure impact assessment or readiness assessment perspective, because you need to identify it. You need to like identify or just list it as out of scope for now. You might also include it if you want to do like a sort of a big bang go live. Then you can still share it through the accredited service provider network. No one will tell you that you cannot do it, but tax authorities have like already tried to make it more flexible for taxpayers by putting those intravat group transactions as out of scope for these first 24 months. Different business impacts, as we said. So we'll go through this fourth section at this level. So different business impacts from a compliance and operational perspective that you need to consider from your side. E-invoicing is giving you the possibility to automate your AR and AP processes. Data will be structured through a specific data dictionary with data related rules that you need to comply with. And when we say data structuring and like data enhancement, it will lead us to greater automation processes and opportunities in the future, which also will give you the possibility to put more I mean effort on some more added value tasks from your side for your business, rather than just doing like administrative work regarding invoicing processes, and you can outsource it and automate it to the ASPs. This will also give you the possibility to reevaluate your existing softwares and integration of the solutions that you have within your IT infrastructure. So today you need to connect with an ASP. If you already have a structured IT landscape using different ERPs or like different tools within your IT landscape, then this is a real opportunity also to reevaluate the use of these tools and to identify what is the best way to connect these tools with the accredited service provider. If you are not already if you have not already implemented ERPs or like a structured IT landscape within your operations, then also it's an opportunity for you to start looking to like different providers on the market to see how these providers can help you streamline your current processes and implement some automation internally. We are talking about structured data, structured information. It will have also an impact on improving the financial and tax accounting processes. It will give you the possibility in the future to rely on like pre-populated VAT returns from tax authorities once e-invoicing is fully involved in the next couple of years as well. So tax authorities are looking into automating or providing a pre-populated VAT returns for taxpayers before submission. So it will also help you in reducing the time and the effort that you are putting on preparing all these VAT returns, and you will rely on pre-populated VAT returns, which you can just review from your side and amend if needed. But otherwise, it's definitely improving your day-to-day processes internally. Better reporting based on specific or structured data and information as well. Like different considerations, definitely from a compliance perspective, that we can discuss during a separate session, and it will require like a separate session to cover all these impacts and considerations from a compliance perspective. But just for you to know that main objective here is not to add pressure on businesses, but rather rather of adding pressure, you should take it as a good opportunity for now to identify the gaps within your processes and systems, trying to streamline these processes as much as you can and automate any task that you are still doing manually, like putting a lot of pressure and waste of time from your side. We are mentioning an XML invoice, but what this XML invoice will look like. So as you may see in this slide, it's a machine readable format. So it will be very difficult for us as humans to identify all the information that we need from this XML electronic invoice. So this will be created by the accredited service provider. So you don't have to worry about how to create or how to read this XML. This will be generated by the ASP, and you can ask your ASP to provide you with a readable format, which will be created on the basis of this XML electronic invoice. So this can be used for archiving purposes. This can be used for reporting and management purposes internally, to keep track of these invoices, to book it within your ERP or your accounting tools. But definitely, you will not have to. It's not mandatory for you to handle all these XML data in this way, and you can rely on the ASP to provide you with this readable format. Data will change, as we said. 52 mandatory fields are to be considered for tax invoices. Part of these 52 mandatory fields are already available today within the systems, within your databases. But the data, or how you are showing the data within the XML, will also change. So today you issue a tax invoice. The title of the tax invoice will be like the title of this document will be tax invoice. You will be writing, for example, tax invoice. Instead of writing tax invoice and putting it in a formal way, in a readable way, the ASP will create this XML and will code the tax invoice on the basis of a code list that we have already from this PEPAL network or this PEPAL structure. So, for example, tax invoice will be coded under 388 code. Tax credit note will be coded under 381 code. So in this XML invoice that I'm showing you here, you will not have a tax invoice listed as tax invoice, but you will have a specific code in a specific field mentioning 388 and pointing a tax invoice to be considered for this case. Other considerations also from a data perspective regarding the date. So today you might issue an invoice mentioning a date in like different formats. Tomorrow with e-invoicing, the date should be listed under YYYY MMDD format. So the ASP will create a tax invoice or a commercial electronic invoice mentioning a date in this format that I'm showing here on this slide. So if you don't have the format today, you can ask the ASP to map it to the right format, or you can do the transformation internally within your system to make it compliant with the requirements that we have in the regulation. Different other requirements as well, like these are some examples that you will have access to once we share the slides with you as well.
Yeah, and I think if I can just add on that slide, right? So the purpose is not to scare you with all the codings and the codes that would be required, right? It's just to show that e-invoicing is something that would change the way you operate business today. And it might be possible, and I think that's why it is helpful to know what ERP systems you are using, what all gaps are there in the systems, because some of these fields, if they are very constant or fixed, those can be managed by your ASPs as well. But again, as we highlighted before, right, ASPs would be charging you on a per invoice basis. So you need to ensure that you what all changes you can do within your ERP system itself, you should do it and use this time to do those changes, and then ask your ASPs to help you with all the remaining transformations, or at least those transformations which would require extensive effort from your time, or your IT team cannot do those changes, because then that's a cost benefit analysis that you will have to undertake once you are analyzing your systems and understand what the gaps are. Mark, continue. Okay, great. So I think thanks, Mark, for covering the e-invoicing model, UAE invoicing model in detail. And I think this is a slide is again going back and reiterating on what we have already said during the presentation. So this is an approach that we have generally devised for most of our clients, and also what recommendation we are giving to clients if they want to get on the e-invoicing journey and have a successful implementation. This again has been taken into consideration basis our extensive effort and experience from other countries where we have implemented similar e-invoicing model. So what we have done for the purpose of simplification is broken it down into 3 steps for you guys. The first step that you should focus on and ensure that you do that carefully is the impact assessment or gap assessment, or if I can say, is a tax technical health check of your business, to ensure where do you stand when it comes to the technical readiness, your infrastructure, what is the status of your master data, what is the status of the reports that you are generating, and whether you are capturing all these 52 mandatory fields, or you would need any support in getting that. And what I always say is that this step is actually the brain of your whole invoicing journey, right? Because if this does not happen properly, the whole implementation will face multiple roadblocks. But if you do this step, take this step very seriously and do this properly, you will have a smooth implementation journey, because you will know in the initial stage itself what are the gaps in your system and what all those need to be fixed either internally or through your ASPs. So once you have done the impact assessment, looked at your AR processes, AP processes, master data, whether your customer data, your vendor data is sufficiently there in your source system, which you need to capture, then you identify all the different type of gaps that are there in your system. Now, these gaps could be categorized into then again 2, 3 categories, right? One would be, say, suppose the data is missing in your master data itself for your supplier. So you don't have any particular field of your supplier which you need to collect from them or your customer. Now, this is a gap which no ASP or even a service provider can help you with. This is something that you will need to reach out to your customers and vendors and collect those information. So that is the first step that you will need to take to start communicating with your vendors and customers and collect those missing information. The second step of data, as Mark was showing in the previous slide, would be a data which is not there in your systems but can still be generated or can be constant. So say suppose a country code, when you know that you're only dealing with customers in UAE, but you don't have a country code specifically AE, then that is a static field that can still be generated. So either you can fill it in your reports when you're generating your reports in your IT, and if you can't do it, you can ask the ASP to have a predefined code for those which can be filled. The third category would be where your data is there, but the data quality is not right. So that, because what we need to also consider as part of impact assessment is not only the data availability, but also data quality. Now, taking example of date, right? So date as per the PEPAL international standard need to be in YYY MMDD format. Now, say suppose your IT system is capable of issuing dates in DDMMYY format, then you will have to transform this into YYY MMDD format before the invoice gets generated into XML and gets validated. Now, this data either can be done in your IT system itself, or you can ask the ASP when you're appointing them that when we send you the data, you will have to first convert the date into from DDMMYY to YYY MMDD format. So those are all the changes that need to be identified for each of the business scenarios that you're undertaking. As Mark had shown you in the previous slide, that there are 16 use cases that could be there. For each of the use case, looking at what all fields you have, what all fields you don't have, and what all fields needs to be fixed. So this all should be covered as part of step 1, which is your impact assessment. Once you undertake your impact assessment, then you get into ASP selection phase. What we see most of the times is some of the clients directly get into the step 2. And when they appoint the ASP and start integration, they face a lot of roadblocks or integration challenges because they have not even mapped their business scenarios properly. So that is why ASP selection should not be started unless you do the impact assessment. I generally use this example. It's like ASP selection is like selecting the right doctor for you, right? So if you have a stomach ache or a neuro problem, you can't go to a general physician and get things fixed. So if you appoint a general physician and you have a neuro issue, they won't be able to help you. So you need to know what your issues are to find who the right doctor would be to help you fix those issues. So that is how ASP selection will happen. So right now, as we said, like there are around 33 ASPs that are there. By the time you will complete your impact assessment, we might have more than 85 or 100 ASPs. Even Ministry of Finance, we attended a session with Ministry of Finance last week where they said that there are already 52 additional ASPs that are in the pipeline. So by the end of, like, if we look from that maths perspective, also 33 plus 85, we already have around 85 ASPs that are in the pipeline. So there are multiple ASPs that would be operating in the market. You would need to see which is best suited for you and can help you with those changes. Because one thing is very critical, unlike France or different countries, you can only have one ASP per tax registration number. So you cannot have multiple ASP, say for your AR processes and AP process. You can, for your entity, one legal entity with one TIN, you can only have one ASP. So that is why ASP selection should be a proper exercise. And some of you might ask as well, right, that whether it can be changed the ASP once selected. Technically, yes, you can change ASP. Similar to just like if you are using, say, SAP, you can change your ERP system to Oracle or any other, but I'm sure you would know how easy it is to change the ERP, right? So similar process would happen when you change an ASP, because once you have integrated them with your system, it's not an easy exercise to change. And as we highlighted earlier, it's a business continuity issue, because for the time duration you will be changing from one ASP to another. That means your systems are blocked. You will not be able to issue e-invoicing during that integration period, which poses a threat on your business, right? Because if you're not giving a tax invoice to your customer has the full right to say, I won't pay you. So that is also to be taken into consideration when selecting an ASP, to ensure that you are selecting the right person who can help you in the long-term journey with compliance, like not only going at the commercial factor right now, but also looking at both technical, functional, and commercial factors, obviously, to ensure that it's not hitting your P&L in a significant manner as well, right? So that's what the step two is. Once you complete the step two, then you get into the step three, which is your implementation phase, which is with the ASP and you. So the work doesn't end once you have selected an ASP. The work only starts then, because then you will need to work with the ASP over the next couple of months to ensure that you integrate each of the business scenarios and are able to issue and exchange compliant invoicing both from an AR and AP perspective. So that is also a critical phase where you will need to ensure that you're working closely with the ASP before 1st January 2027 to integrate all the models and implement invoicing smoothly. And if you see from on the bottom side, right, we have mentioned various department, which is finance and accounting, internal controls, IT, tax, legal. So this is not just to show different department, but to highlight that e-invoicing is not a tax project in itself. It is a business project. So you should also consider e-invoicing as a business project, a transversal project, which will impact each and every department of yours. So what we recommend to our clients as well, whenever you are getting on the e-invoicing journey, make sure you make a project team which has a representative from all these different departments, because even though it is IT heavy or tax heavy, you will need legal, internal controls, finance and accounting teams to have a seat on the table, because it impacts all of these processes as well. And why? I'll give you a quick example. Say from a finance and accounting perspective, if there is any gap in your master data, which is your vendor master or customer master, your finance and accounting team or your customer facing team will need to reach out to the customers and vendor and collect those information. So you need them to be present in the whole of impact assessment, so they understand why you're asking for this information. Internal controls and audits, obviously, because you will need to make changes in your processes both from an AR and AP perspective, and hence all your internal controls, your policies, your SOPs will need to be updated or revised to ensure that they are compliant with the invoicing. IT, without a doubt, right? Because ultimately it requires changes in your IT system, so IT needs to be involved. Tax, because it's a tax-driven project, the information is being shared with Ministry of Finance and FTA on a real-time basis. So you need to ensure that it's compliant from a tax perspective as well. And legal, because you will require a lot of times changes in your customer and your vendor contracts as well. And why? Because you will need to get indemnity from your vendors in case they are not issuing you compliant e-invoicing now. you have the right to withhold payments, right? So you will need to ensure that your agreements today with your vendors and customers have sufficient clauses to protect you guys, and you are having sufficient safeguards or guardrails in case your customers or your vendors are non-compliant, so that you don't get the penalties because of their non-compliance. So hence, all of these departments need to be there in the meeting, in the project team, to ensure that the e-invoicing project is undertaken successfully. Mahir, I don't know if you would want to add anything on this one.
Thanks, Ishan. Yeah, maybe a comment here. The way we're describing steps here, step 1 to 3, it's very important to consider various aspects. First, ASP will have solution for integration to be able to generate e-invoicing, but they will not be capable of advising on what is required in terms of use cases, integration models, and so on. So we've seen currently, we've been engaged with lots of businesses on helping them with the impact assessment, ASP selections. We've seen lots of businesses who jump directly into selecting ASP or appointing an ASP to manage the invoicing implementation. They are facing challenges in terms of what use case are being applicable to them, what scenarios they need to consider. ASPs are not able to provide such support. So be careful on jumping into step 2 before doing step 1. You've been all witnesses for VAT implementation, right? Any error that you have committed in 2017-18 is haunting you until now. So don't I would say fall within the same play. You have an opportunity now to make things happen at the right process and the right approach, and consider this not only a one-off project. It's an opportunity for you to start automating and digitization of your operations and businesses. Things will be moving into a more systematic approach where things will be actually flowing from your business to the tax authority on a real-time basis. We've seen this happening in KSA, for example. Saudi Arabia implemented the invoicing in waves, as Ishan mentioned. Recently, we start seeing businesses receiving requirements from Zatka saying your e-invoicing data do not match with your VAT return. Could you please reconcile? So means that the tax authority will not just collect those information and keep it aside. They will start using those for reconciliation purposes, for e-audit, e-processing of refund, and so on. So this is a one-off opportunity for you to do it right and from the beginning. So this is really important. And again, as Ishan mentioned, you need to integrate all your business operation departments within this project, because if you don't have that integration, potentially there will be a certain extent gaps in that implementation. So try to avoid that by integrating everyone as you go. Ishan,
Yeah,
back to you.
thanks, Maher. And I think that's a very valid point, right? Because um, you, under VAT, you still, some companies might have not faced VAT audits till now, right? So you've gotten away with if there were any operational gaps as well. Under e-invoicing, as we said, which is the fifth corner, Ministry of Finance or FTA would be receiving real-time access of your information. So they would be also getting details on what transactions you are undertaking, where you are charging VAT, where VAT should have been charged or where VAT should not have been charged, whether the VAT returns that you are filing is reconciling with what you are doing in the e-invoicing data. And also not only think about VAT, but also broader than that, corporate tax, transfer pricing, all filings are going to the same tax authority. So you'll need to make sure that you have your house in order starting January 27, because then tax authorities have real-time access of what issues or any technical issues also that might be there. And we have seen multiple precedences in multiple other countries, right, where tax authorities have identified identified gaps much in advance, rather than waiting for even the audit to start. So I think we need to make sure that we are ready starting January 27, and we have proper positions that we have taken from a technical perspective as well are being captured accordingly. Yep. So we can move to the next slide, Mark.
I think we're running out of time, so let's once we finish this, we have to start the Q&A also. I think that
Yep.
will be very interesting for our members. They're eagerly waiting for Q&A.
For sure, Anshul. I think we are almost done. So this is again something that we were reiterating on what are the challenges and opportunities we have seen in the region, right? So we can skip this. It's just to let you know what things that need to be taken into consideration when you are doing the impact assessment, when you're selecting the ASP. But I think we have already covered that when we were discussing the last slide. Mark, we can move forward. Yep. So we are done, Anshul, on time. And I think now we are ready for question and answers, hopefully.
So Wasim, I'll start the Q&A round. Anything is on the
Surely, sir.
agenda?
Surely. Please begin.
Just to summarize, a very interesting session. I was thinking VAT is gone, so we are relaxed from 14 January, but seems we have another situation. And interestingly, it is in our benefit. We have to just organize our houses, organize our systems, and it is more beneficial for our real recycling industry. People who are doing good job, they will be having a more transparent system, more authentic, more directly connected to the government. So just want to understand the transition
Yeah, I
period you
think
mentioned.
sorry to cut you out, but I think you made a very valid point, right? So I think a lot of people, when we speak to them, they consider this as a more of a compliance or a regulatory obligation. So we have to comply. I don't think we should take it from that perspective. We should take this as an opportunity to bring more efficiencies in our business, because with e-invoicing, it will not only help you with being more automated and efficient, but also getting payments also faster, which I believe everyone in the group would want to hear, and get payments quickly from the customers and vendors, right? So it will help you in faster processing of your payments, efficient cash flows. So it has a lot of benefits as well for the industry as well. And as we say, right, there is no gain without pain. So this is a short-term pain to get you guys a long-term gain in future.
Absolutely. I also agree. So just to understand the transition period in 2026, 1st July has been moved on to 1st October only for identifying the right ASP, cleaning your houses, organizing yourself, impact study, right, and be ready. But 1st January, we have to mandatory follow it. Till then, it is not mandatory. It is transitionary.
Exactly, Anshul. I can take that question. So yes, you are absolutely right. What they have said is from 1st for July, you can start as a pilot, where if you want to say you're doing a soft launch, or you want to try and test whether your invoices are passing through, the government will not penalize you even if there are any rejections or anything before 1st January. But post 1st January, it becomes a mandatory requirement. What they have only delayed for transitionary period is to help you take more time for appointment of ASP. So if you are not able to appoint an ASP by 31st July, you can appoint them by 30th October. But just to give my experience as well, I worked in industry extensively as well, where I was heading tax for Middle East and Africa. It requires much more than 6 months also to be ready for invoicing, even after you have selected a service provider. So trust me, even if you start now, you don't have enough time if your systems are a little bit complicated as well. And that's why I think Mark and Mahir was also mentioning during the presentation, it's better to start now and appoint ASAP rather than waiting till 31st October. Because once you appoint an ASP also, you need at least 3 to 4 months minimum to be ready, even if you work extensively on this project.
Right. The second question, I'm just asking the question which are coming to my mind, and then I'll take up almost 12 questions are on the Q&A board, and I also got some WhatsApp messages around 5 or 6. So I'll just be quick. We have another 30 minutes to finish the whole session. So how do you, I mentioned about the doctor, right? You have to choose the right doctor according to diagnosis. We do the impact study in our books, and we definitely need ASP. How do you choose the ASP? Each ASP has a different specialty, or do they tell you that, okay, I specialize in this particular software, integrating this particular ERP I can do, these particular invoices I can do. I can work on holidays also for you for making for generating the invoices. So what sort of things and qualities we should seek in ASP while choosing? Just for
Yeah.
just to understand the issue.
I can take this one, Ishan Maher.
Yeah.
So normally each ASP, so as we said before, we have for now 33 pre-accredited ASP on the web portal. Not all of them will serve the same, will be serving the same market. Some of them will work with or provide some like platforms or systems that will that that will be that will suit better big corporations. For example, providing some API connections, being able to connect with multiple systems, multiple ERPs, middlewares, and different systems within the IT infrastructure. Some of them will be specializing in a specific industry. For example, we know that some of the service providers that are already accredited in UAE are specializing more into financial services. Some of them are more into real estate. Some of them are more into retail. So depending on the industry in which you are as well, this can be taken into consideration. So first of all, the size of the company and its technical complexity. Second is the ability or the possibility to specialize in a certain industry. And third one is very important as well, is regarding the international footprint. So sometimes you have some service providers operating in UAE who are more into the regional market. Some of them, some others are more into like are operating on an international scale. So if you have operations on an international level, it's better also to consider selecting an ASP operating in different countries and having more experience on the PEPPOL framework and other European or Asian countries as well. So those are like main three considerations that you can keep in mind for now, other than definitely the technical considerations, if the ASP will help fulfill the gap in terms of data, enhance the data if the data is not compliant with the format, or you don't have the complete set of data that you need for e-invoicing. So all these can be considered as well when selecting the ASP.
Okay.
Maybe also to add, I think one also important element would be cost. So you will have various ASPs with
Right.
different cost models. So you need to see what cost model they offer and what suits your business best as well. Because this is
Right.
a continuous cost that you will be incurring for your business.
So as a first step, all of us are thinking how to do the impact assessment for our organizations. So you do have any set format which you can share with the members where we can do our impact assessment for our organizations? How should we approach?
That's an interesting question, Anshul. So there is no set format as well, right? Because this is why what we are saying, because it's customized as per the company facts,
Okay.
scenarios, and everything. Yes, there are templates, but again, that those would not be helpful unless and until you list. So I think what our recommendation would be, if anyone wants to do in-house, which is a little complicated, but list down all the different business transactions they are undertaking. Then look at what all business scenarios are applicable to them, and against each of the business scenario map down the fields that would be required to be like to issue a compliant invoice. So I'll give you, because in the recycling industry, you guys have a lot of transactions like metal scrapping and all that. You have reverse charge mechanism also applicable, right? So for reverse charge, government has given a separate use case where certain reverse fields related to reverse charge will become mandatory. So it will become say 55 from 52 mandatory field. So you will need to know what all business scenarios you have, in which business scenario what all information you need to collect, and then what information you have and what all you need to factor in. So it's like easier said than done, but then this is the step that you need to follow if you want to undertake impact assessment yourself.
Right. Also, one question, ASP, as I understand, all the invoice should be given to ASP and then they will issue the invoice through the system and send to the ASP of the customer
Customer.
Exactly.
when I'm a seller. So in such situation, if it is a holiday or late evening, so do we need to negotiate these working hours also with the ASP when we're choosing them?
Yep. So these are there. So see, when you appoint an ASPs, you will also need to make sure that you have SLAs agreed with them, right? So there is no, see, what you need to understand actually is that there is no manual person sitting and validating these invoices. It's all automated through systems.
Okay.
So we are explaining in 10 to 15 minutes, but when the invoices will go to the ASPs, it will be a matter of seconds where automatically it needs to be validated and sent. So even if it's a weekend or a holiday, the system should work. So it's a system should work ideally 24/7. And if there are any gaps or any blockers, then they need to update you, because from tax authority side also, what we understand, they have been given 10 to 15 minutes to ensure that all the invoices are being validated and shared with the customer. So they cannot take more than that because you need to comply with the not only e-invoicing but tax law requirements as well. So you need to
Right.
ensure that you have these SLAs agreed with the ASP that you're selecting, and also in case of breakdowns, whether the ASP agrees or not, but you have sufficient indemnity that if you are penalized because of their system being down, then you need to be compensated for that as well. So that is why, as mentioned, that legal also needs to be involved throughout the process, because these are the terms that you will need to agree with the ASPs when you are finalizing contracts with them.
Also, what I understand, we should not buy or sell without getting the e-invoice validated through the ASP system. Then only we should transact the money part, right?
Again, payment is not technically linked to the invoicing process, but yes, because if you are not getting a valid e-invoice, that means the tax authorities are not getting the information. So you or your customer might have the right to say, I will not, today also, if I buy something from you and you don't give me an invoice, I have the right to say, sorry, I'll not pay you because you have not given me an invoice. I don't know if you are paying back to the authorities or not. So similar way, your customers can still challenge you if they are not getting a valid e-invoice. So it's not from a government perspective that they're saying don't make payment. What we are saying, it's more from a commercial and contracting perspective, legal perspective, that you should have clauses in your agreement which says that I have the right to withhold your payment if I'm not getting a valid e-invoice from you. And similarly, your customers also might want a same sort of a guarantee from you that they will not make you payments till the time they receive an e-invoice from you.
Right. So I'll just come to the question answers, which is on the board now. So from our BMR team, Vedangi has done a great job. She has posted or collected all the questions and posted for us. So if any company, 50 million company has do invoicing to below threshold company, how will it happen?
Yeah, so we have covered already this in the presentation. So it's a hybrid approach. So you
Right.
can still issue a standard invoice to your customers falling in the second wave if you fall in the first wave as a supplier.
So, but in this case, shouldn't we issue the invoice through our ASP? Also, because we are 50 million companies, we are obligated to do
Yeah.
our compliance.
Yeah,
So
as
that's
we
what we
mentioned,
Request the invoice.
as we
so
mentioned before, so this data will have to be shared with the ASP. So the
Right.
ASP can share it with the tax authority, but also in parallel, you as a supplier, because your client will fall in the second wave, then you will still have to issue a standard invoice in PDF or whatever paper or whatever like type of invoices that you have today, the same way during this transitional period until your client falls within the second wave and starts e-invoicing in July 2027.
And just to add to that, Anshul, what will happen is when you guys are sharing invoicing with your ASP, they will also have to, because as per the MOF guideline, they also have to generate a PDF copy of the invoice that you are validating. So it's an XML file that's electronically going through the system, but there'll be a PDF copy that they will generate, and they will put a UUID as well on the, there's a unique identifier that they will put once the invoice is validated. So you can also use that copy of the invoice to be shared, PDF copy of the invoice to be shared with the customers online. The problem here that will happen is because they are not part of the invoicing network as of now, they will not automatically get the invoice. So as per Mark, you will need to manually, or when we say manually, it's not that you'll need to print and share, but also through the email
Digitally,
or
yes.
whatever way you are doing it today, you continue doing that,
Right.
but you'll need to use that invoice PDF copy to share with the customer.
Right. So second question is, any of the two companies get involved, which are involved in the transaction, they get into issue of temporary suspension, any one of them, then how will the transaction happen? Both are 50 million plus companies, one of them suspended due to XYZ reason. So should not we avoid such transaction at all, or
That's again a good question. See again, and that's why we say that it's very important that you select the right ASP, because when you say temporary suspension, I'm assuming you mean that they are not able to either transact through ASP for technical issues. Yes, it is a challenge, and that's where your legal comes in between, because if you ideally need to share through that process only, and if that is not, the ASP or you have a responsibility to inform the Ministry of Finance and FTA the reason why you are not able to share. So there it will have its own legal complications, which you will need to follow, and the government might give detailed guidelines around that. But the issue would be that you should ideally not deal with them, or make sure
yeah,
that you transact as soon as the system becomes live again.
right? If it's a technical glitch, you can still sort it out. If it is a legal glitch, then unless it is fixed, we should avoid.
Exactly. And some of the companies which we are working with large scale, they actually, just to give you guys an update, right? Even though it's not legal requirement, like say for the hybrid approach as well as we are mentioning, some companies don't want to get into that complication only, and they are saying we will only deal with vendors or customers who are part of e-invoicing. So they might even restrict working with you, saying that we will not deal with you because you are not complying with the invoicing, even though you are legally required to comply from 1st July. So you might face such issues with if you're dealing with large enterprises as well, right? Because they don't want to get into the hybrid approach. So this again is not a tax like technical requirement, but again legally or contractually, I can implement policies within and enforce it on you. So we are also seeing some clients who are actually doing it before, just to ensure that they don't lose contracts as well.
Right. And also it gives you a sense of rehearsal, 2, 3 months of you can learn from your mistakes, improve your system, improve your information, because that is going to be really, really reliable and must required. Another question following to the earlier one, that suspension we mentioned. Suppose there's some government penalty due to which VAT penalty due to which the account is suspended. Now, in such case, how do you transact? It would be very difficult to even issue the invoice.
Yeah, maybe let me take this. Look, this is a system, automated system. So when you appoint an ASP, you will have that automation happening automatically. So if there is any gap or any technical issue, this need to be reported to the FTA, as Ishan mentioned, and need to be resolved with the ASP. I think the question here will refer to the government being imposing penalty or actually suspending the transaction if something happens. Look, similar to any implementation or any regulatory requirements, there is an penalty regime, and Mark has already defined those points of penalties being applied. The government will not come and suspend or put a ban on your transaction, but they will impose penalties if you're not aligning or applying e-invoicing in the right way. Yeah, mainly that's the answer.
Thank you, Mahir. So one more question came up is, in our industry, we have provisional invoicing system where price is not fixed and the invoice is issued to complete the logistics and payment formalities. It's a provisional invoice. Once the price is fixed, we are reversing the provisional invoice and issuing the final one. So what would be the treatment of e-invoicing in this case?
Yeah. So, Mark, I think we get that a lot, and there are some issues in guideline. Do you want to take that up, or do you want?
Yeah. So can you take it, please, Ishan? Sorry, I
Yeah, I'll do
wasn't.
it. I'll do it. So again, this is a very interesting question, Anshul, because recently, and what we were telling, I'll tell you before the guidelines that were released very recently to the clients were that yes, if you are facing any issue and you are not sure what the amount should be, just issue a provisional invoice to your customer, and then once they confirm, then issue the e-invoice through the electronic network. Now, one of the interesting changes that the Ministry of Finance has introduced in the guidelines that they recently released was they're saying even if you are issuing a provisional invoice, you need to ensure that it's going through the electronic invoice framework. Now, what we need to see is what is the difference between provisional invoice and a draft invoice. And even if we went to the ChatGPT and looked at what's the difference, it's generally used interchangeably, but it's not. So when you're calling it a provisional invoice, that means this invoice can enforce payment also from the customer unless there are any changes in the price or in the quantity or anything. But when you are issuing a draft invoice, it should not be recorded anywhere in your books. It should not trigger any payment. It's just like an offline mean to get a confirmation that the customer is agreeing to your, and then you are issuing. So you need to be now very careful how you are wording these type of transactions and how you are recording it in your books. So if any provisional invoice is creating an entry in your books of accounts, it's creating a payment trigger, then it also needs to be through a proper e-invoice channel. It cannot be outside the invoicing. But if you're issuing a draft invoice, which is not an invoice, it's just a Excel-based calculation that you are sharing with your customer, just to ensure that they are aligned on the values and everything. And that invoice is neither recorded in your books, nor it is part of the sequence that you are generating from your system or triggering any payment, then it can still continue to be outside the invoicing scope. I hope that answers, right? Because that's very critical to know the difference, because they have introduced a paragraph in guidelines where they have said any provisional invoice will be required to be through any invoice network only.
So just to add one more thing, we also issue invoices locally as well as for our exports. where these are sorry, not the invoice, the contract, sales contract. Now, based on this sales contract, the customer sends us 10, 20, 30% advance. So that would be also treated as a performa invoice, or e-invoice
That's a
system would
proper
be applied.
invoice.
Provisional
And
invoice.
even if you're getting advance, right, what you're saying, because the moment you get
Absolutely.
advance, you have a requirement today also as per the VAT law to issue a tax e-invoice for receiving that advance. That requirement continues under e-invoicing as well. So you'll need to issue an e-invoice for the advance payment that you're getting. And again, exactly, Anshul, to this point, they have also mentioned one of the similar use cases for where you are getting advances, what all information should be mentioned in the invoice in those cases. And when you are issuing a subsequent invoice adjusting that advance, then also there needs to be a separate field. Say, like, say, suppose you've received an advance of 20 out of 100, you've received 20 now. You have to issue an invoice with 20 plus VAT and communicate, like, flow through this invoicing framework. In future, when you're issuing the invoice for the remaining 80, you will still have to mention 100 minus 20 on which you have already paid, then the 80 plus VAT, which you are now recovering from them. So both invoices will need to flow through the invoicing framework as well.
So what about the export? A lot of our recycling industry members, they do exports. So maybe 60, 70% is exported. So in such case, because VAT is not applicable on exports, it is zero,
It's
right,
zero
for
rate,
the
right? Yes.
item. So in such case, whenever any request for advance is also sent,
It's
so we have to
yes.
agree with the invoice.
Yes. So today you have an option, and one of the amendments that Mark was showing, right, when we were presenting, is that today, under the VAT laws, you have an option not to issue an invoice when you're only doing a zero rated supply, which is an export, right? Under
Hmm.
invoicing, that option is not available. For every export, you have to issue an invoice, be it
Okay.
advance, just like what you are doing for the normal UAE customer. So no exception will be allowed, or no exemption will be allowed once for issuing e-invoicing once you are under e-invoicing framework
So and the
starting
PDF
tomorrow.
copy of that invoice has to be sent to our customer because he might
Exactly. So
not
it
be
will
able
still be that
to
hybrid
process.
approach where you sell the invoice to your ASP, get it validated, and then take the PDF and share it with your customers manually outside.
Right. One of the question which come up is if some company crosses threshold in between or near the end of financial year, normally it happens the turnover is 30, 35 million. Now the market prices went up by 30%, like copper. So that gentleman or his company crosses 50 million and he
So you
comes
have
to
to
know
look
during.
at your last financial statements that you have issued. In the last financial statement, what is your revenue? You have to monitor on that basis, not the current one, what you are going through. So it's as
Okay,
per the
so how
last
much will be
financial.
the grace period to transition? This year he's getting 50, so he'll be obliged to start somewhere. So what is the transition period or any time period is there for the companies to adopt it?
No, so see, that's what I'm saying. So if in the last financial year that you closed, in your financial statement, what is the revenue you need to see, and then you determine whether you need to issue by 1st January 27 or 1st July 27.
Okay.
Now
So
I'll
the
go one step
succeeding year
ahead.
will
If you're, say,
decide.
setting up a new company,
Hmm.
you don't even know, you don't have a turnover for that,
Yeah.
government has not yet explained if there will be any grace period or not. Ideally there should be, because the moment you're starting business, say, and I'm going one step ahead, say suppose in August 27 you open a new company. Now does that mean that you have to start from day one? The answer to that, yes, right now is yes, technically, because the government has not given any grace period post 1st July 27, because they are saying after 1st July everyone has to comply with the invoicing. In future, we expect that they might give you more clarification when more clarification come in and feedback, if they provide any grace period or not. But as of now, there is no grace period.
Okay. And the next question is in scrap industry, we have RCM, how it will work. I think we already answered this
We
during your
already,
presentation.
yeah.
We'll go to the next one. It was mentioned that payment to be updated in system. Will it be linked invoice or receipt? Its implementation will now, or will it be later on?
I think we answered this one. So payment is not right now the part of this invoicing framework. In future, if tax authorities plan to monitor that as well, that's a separate thing. But as of now, it will finish once the invoice is exchanged. Payment
Right.
and everything continues manually as they are doing today. And I think we have answered the second question also, that can ASP be changed once selected by the company? Technically, again, yes. But again, it will be a complicated process because you have to select the ASP on Emara tax portal. So if
Hmm.
you don't, once you select them and once you have to change, you'll have to again go on Emara Tax on FTA website, de-link them. The ASP also needs to approve, and then you have to select another ASP. So technically, yes, but it is a complicated process.
Okay, so we have to be very careful while selecting the ASP because change would be difficult for us. And as you mentioned, we need the consent of the ASP also.
Because see, contractually say, suppose you have not made their payment, they might not approve. They'll say, first make me the payment, and then you will say, no, I will not because you did not integrate. There are legal disputes that might come up. I'm not getting into that, but yes, that's why I'm saying be very careful when you are selecting, while if you don't want to face issues later on.
Right. One more question was the third port transactions, which is not even touching UAE, any goods and services. Will it also be included in invoicing system?
Yep. So I'll take that. Yeah. So it's mostly referred to high sea sales, right? Where you are billing, like buying goods from, say, Germany, shipping the good directly to India. The
Yeah,
goods are not
absolutely.
entering. So those are the transactions I believe they are referring to. Technically, yes, you have to, because what the tax authority have says it, for all out of scope and exempt supplies, you have to issue a commercial e-invoice, which will have their own 49 mandatory fields. For all taxable and zero rated supplies, you have to issue a tax e-invoice. So for these high sea sales, which are generally out of scope, you have to issue a commercial e-invoice, and that also needs to be through this framework and informed to the tax authorities as well.
So that means, as I understood, all the free zone company, wherever they are in UAE, they have to comply with this law.
Exactly.
One more question from Syed Fawad. Will business be allowed to change ASP providers later with the data migration? So this, I think you already answered. It would be allowed, but then it's a process you have to follow, and it can be troublesome. So we highly recommend, before you hire, engage anyone, please do your KYC properly. One more question from Sayed. From practical implementation perspective, what internal controls and process changes should finance team start preparing today to ensure smooth e-invoicing compliance?
I think this again this is the whole presentation that we gave. So
Yeah, so I think it's already
Yeah,
answered in this.
can I add something here? I think
Yeah.
as a starting point now, the businesses need to understand their as is environment, what they have, what they need to do to be able to appoint an ASP. So that's the key point as of now to look into.
Okay. Since invoice data is sensitive commercial information, what cybersecurity data and residency protections are expected? So I think that's a main thing actually. So I'm sure
Yeah.
the software would be cybersecurity, firewalls, all these things would be there.
Yeah, maybe this is mainly because today, to be an ESP, you need to be accredited by the tax authority. And part of that accreditation process, there is a consideration that the FTA is looking and the Ministry of Finance are looking into to make sure that all the data are secured, stored, and accessible only by the ASP and the relevant person. And what we do understand as well, ASP will not be archiving or maintaining this information. They will only be processing data to the tax authority. They might have an option to archive, but this is an add-on that you need to agree with your ASP.
Yep. And if I can just add to what Maher is saying, right? Because I don't want to be too technical, but as part of the accreditation process, as Maher mentioned, right, you need ISO 22301 certification, 27001 certification. So these are all to ensure with that they have proper security protocols in place, so that the government is ensuring that they have those before giving them those accreditation. But even if that's done from the government side, we would encourage, if you have concerns regarding sensitivity, please make sure when you are appointing an ASP, you take proper documentation, their certifications as well into place for your backup as well, to ensure that they are properly certified and your data will not be leaked. So you can have, say, the government is putting together a proper benchmark, but if you have higher benchmarks for your company, please make sure that you ask them also those things, because that might rule out certain ASPs who might not have. So you would only want to deal with ASPs who have higher level of certifications than what government is asking for.
Thank you. So one more question from MIG International. How will we manage cutoff dates between sales date versus purchase date? If sales party shares sales invoice in December, how will we book invoice which goes live in January 2027?
Yeah. So again, I think a simple answer to that is, when you are issuing the invoice, as per the VAT law, also that's a requirement today. that invoice, if that invoice is being issued post 1st January 27, it needs to be through e-invoicing. It cannot be. If you are say selling something in December, then technically, as per the VAT law today, you have 14 days to issue the invoice. Now, say suppose you issued on something sale, you made a sale on 1st December 26. So technically, you are required to issue invoice before 14 December 26. So that again, and if you're issuing in December itself, it will be a normal invoice. If you have made a sale on say 28th of December and you are issuing an invoice on say 2nd of January, that invoice will need to be an invoice. So any invoice issued from your system, you need to be sure that after 1st January, it needs to be an invoice.
Also, from 1st January, you cannot go on backdate and issue the invoice. This is another challenge. So
That
it has to
yes,
be every
What I
single
do,
day has to be monitored and
exactly.
closed properly because you cannot issue the invoice next day.
And it's a big implementation. What I have seen in multiple countries where I have worked on invoicing in India or in different countries, what generally companies do is they have a cutoff date. So what they can, you should ask your finance team is say, suppose if you're ready, if you're being ready at the end moment, that post 28 December till say 1st of January, no invoices will be processed or no sales need to like again have a cutoff period to ensure that you are not being non-compliant. So anything all sales to be made till 31st. If you are able to issue invoice till 31st, then do it. Otherwise, have a cutoff period that after 1st January, everything needs to be through e-invoicing framework. Some
Right.
similar to what you would have done during VAT implementation as well, right? Like you would have had put cutoff period from 1st January 2018, that before that, make sure that you undertake all the sales and goods are also dispatched. If not, then don't do it till the time 1st January is there.
Right. So the other question is regarding 50 million threshold, which you already answered. For the following year, the past year, if you're crossing 50 million, then next year mandatorily you have to follow this invoicing
Exactly.
law. Coming again to another question, MIJ, if a company is in free zone and not registered in VAT, as not mandatory to register, do the company need to register for invoicing?
Again, important question. E-invoicing has to do something, but it has no linkage with VAT as such. Even if you are not required to comply with VAT, you have to comply with e-invoicing. So what they have said is, irrespective of your VAT registration or corporate tax registration status, if you are undertaking any business activity in UAE, you are required to register for e-invoicing and comply. And that is why they are not asking for your TRN number as part of this process. What they're asking for is a TIN number, which is the first 10 digits of your tax registration number. So even if you would not have a VAT registration number, you would automatically have a TIN number, or you will need to apply for a TIN number with FTA to start with e-invoicing.
So all of us, any company, whether you're working locally, abroad, free zone, we have to comply with invoice. That means we have to register ourselves with the VAT and then get the invoicing
Not
sorted.
specifically registered for VAT because of e-invoicing, Anshul, just to
Then
clarify.
how,
You
yeah,
have
but the
to
TIN number is required, So without
TIN number, but
VAT,
not a TRN. VAT is associated with TRN. TIN number is the only the first entity. So you might be, and I'll give you an example. You might have business which is below the 375,000 threshold as well, right? So you still don't need to comply with VAT, I'm saying, but you will have to ensure that when you are registering and getting the TIN number and issuing commercial invoice for all the sales that you are making.
So there's a difference in TIN and TRN. So that's
Exactly.
what we have got. Okay.
Yeah.
Another question from Sanduni from Liberium Group. Can you please clarify how does this process works if the company does transaction with international companies only? Yeah, but you already mentioned this. Whether it is local or abroad transaction, it has to be invoice if you're above 50 million. That's
Yeah.
a criteria. Another question received by Vedangi was, kindly suggest which software or ASP would be good for import, export, and local invoice document preparation. So I don't know how PwC can support our members in this.
And so this is something that, to be honest, on a forum, we cannot tell you which software. Everyone is good, right? Everyone is the best in their own space. But again, it would depend on what problems you have, as I said, right, to help you select who the right ASP would be. If you talk from a general perspective, government giving accreditation to all these ASPs is the first step to prove that they are all good, and all would be good recommendation from Ministry of Finance side. Whether that ASP is good for you or not depends on your problems. Again, I'll go back to my example, right? What problems you have before I select you the doctor, right?
Understood. So also Sayed asked, will all VAT registered businesses be required to onboard with an ASP directly, or ERP vendors also would be allowed to act as certified access points? So
Yeah, that's an interesting one. So if you see some ERP providers like SAP now is an ASP. Uh, Tally is an ASP. Some of the service providers are also becoming ASP. So again, it would depend on your business, the ERP that you're using. You will have multiple options. You can connect directly with the ASP through APIs. You can have SFTPs. You can your ERP, your ASPs can connect with different ARP as well. So again, all the approaches are possible depending on what capabilities your ASP that you're selecting have.
But that's very interesting. Anyone using any ERP, that particular ERP company can also be ASP if they're certified by the government.
Exactly. And most of the ERP providers we are seeing generally they take ASP certification because they want to give this service to their customers as well. Like taking example of SAP, if you are on SAP, but generally it's expensive, but then if you have their DRC module as well, you can also take now their e-invoicing solution as well because they are registered as ASP. Oracle is not an ASP. So if you're having ERP is Oracle, then you might need to go with some other ASP till the time Oracle becomes an ASP or if they become an ASP. Similarly, for MS Dynamics, Microsoft is not an ASP as such, but you can have multiple ASPs who can integrate with MS Dynamics as well. So again, for Tally is an ASP. So depends on what
Right.
ERP you have, and then you need to check with your ERP provider whether they are planning to be an ASP, and if commercially it makes sense to have the same ASP also or not.
I totally understand. First, I think the foremost thing which I also recommend based on your presentation is impact assessment. First,
Exactly.
see yourself, your industry, the nature of business, nature of transactions, assess the impact, and then you can formulate a policy, choose the right ASP, start looking for it. And maybe PwC, you can engage PwC for impact assessment. I will highly recommend PwC for that job. Any other questions we have, Wasim?
No, sir.
I've taken almost all of them on the board. Nothing is
Yeah, you
left.
have covered everybody.
And we'll share the presentation. One of the gentlemen asked about the presentation. So with the permission of PwC, we'll share the relevant slides.
Also, also I would like to tell everybody that this entire webinar that has happened, we'll be uploading it on YouTube for everybody to have a look and keep referring to it as the time comes. So yeah, that is what in BMR, when we say about the new narrative, what we really believe in is making sure that the industry is prepared well in advance. The knowledge sharing is done right, and this is one industry connect is one step towards that direction. And with this we would want that this YouTube efforts and all of this is there to make sure that we all move together in the right direction as the industry. I would like to thank the PwC team, Mr. Maher, Mr. Ishan, and Mr. Mark for being a part of this, agreeing for this, and giving it their all. Right through the weekend, I was actually disturbing Mr. Maher a lot, and he was always there. Mark was mailing, so thanks a lot for that. I would like to thank the EXCO team comprising of Mir sir, Anshul sir, Muzammil sir, and Sanjeev sir for making this happen. The webinar committee comprising of EXCO members whom I just named, and even Mr. Pidara. He really, really helped us in making this happen. Thank you, sir, for that. All the board members, I would really like to thank you all for your support because it is because of your support that you all have been going around telling everybody to be a part of Industry Connect. I'm very proud to say that today again we crossed 120 participants in the webinar. So this itself is a very big thing. And when I'm saying 120 participants, it must be every participant must be having 2 3 people along with them. So it's a huge, huge number that we are reaching out to, and it's a huge number that we are touching. So thanks a lot for making that happen. All the members of BMR and all the recyclers and all the leaders of the recycling fraternity, it's you all that make the change happen. We are your, as we say, Zaria or the provider. We believe in making the change, so we are sort of a change maker, but without you the change is not possible. So thanks a lot for always being there with BMR, and in future we are going to have a lot many more such kind of knowledge sharing sessions just for the industry and our web and our members. Also for our members, a very good surprise is just around the corner. BMI is going to announce something which has never been done before by any other association, and just in the next 30 40 days you will expect this announcement coming, and we look forward to having you all as a part of that. Yes, the membership is full on going on, and we are having a great response to our memberships. We are taking care of our members, and I assure you that whether it is the DMCC efforts that we are taking place right now, or whether it was the RCM, all the other efforts that BMR has been taking for its members and for the recycling fraternity, we need your support, and for that, we need your membership. So it'll be great to have you all, and we expect many more knowledge sharing sessions like this. This is Wasim Kapadia, the Secretary General of BMR, signing off. Thank you so much. Bye bye, everybody. Take care.
Thank you. Thank you.